What's going on, everybody? Welcome back to my YouTube channel. So for today's lesson, we're going to go over a very powerful breakout strategy. Now, this strategy can be used on any time frame that you would like, and for these sessions we're just going to be using one single time frame. Now, I'm going to go over the rules for you in a minute on the screens, but as of now I just want to say, anybody who plans to trade this, do not go live straight away. Make sure that you're back testing this, putting in at least 100 trades, and making sure that you are confident and have enough faith to execute these in the live markets. Just remember, when you're back testing, there's not as many emotions for the majority as there are in the live markets, and you don't really fully get to deal with the time constraints that you may in the live markets, meaning entering a trade, waiting for a trade, managing a trade, etc, etc. Because of course, when we're doing it on the backtesting simulation, we're able to press next bar and we're able to get through a lot more data. But for today's lesson, we're going to do a breakout strategy. We're going to make it up on the spot. We're going to use really tight risk management, and we're going to see how it goes. 10 trades. Let's roll the intro. Catch you on the other side. Alright everybody, so let's just take a look at the quick strategy right now. So the aim of this strategy is just to trade with the trends. For those that have been following me, you would have seen that I've done this many times before, but this time we are going to be doing a breakout strategy. So what we're going to be looking for is we're going to be looking for early signs of reversals, so price failing to break structural lows, looking for continuations to the upside, or early signs of reversals. We're also going to be looking for the market to show strong trends, and then we're going to be looking for price to break previous structural lows or previous structural highs to then look for continuations. And in terms of risk management, what we're going to be doing today is we're going to be focusing on 1 to 2 risk to reward ratio, simply because when you're taking a breakout trade, you're missing quite a bit of the move, at least 1 hour of it, because you're not entering at the lower highs or the higher lows or at key levels. So we're going to go for a 1 to 2 risk to reward ratio trade, and we're going to be taking 10 trades in total. Now, the risk management factors here is once price breaks a previous structural low, if price closes below that structure, we'll hold our trade. If on the breakout, price breaks out and then the candle closes back in or back above the breakout area, then we'll be looking to put our stop loss to half, or we'll be looking to close the trade. Simple risk management here, and in total, we will be taking 10 trades. Now, this is going to be completely random, so I want you all to take note of this. This has not been planned, and we're going to make sure that this is super random for all of you to see. So let's head over to the pairs. We have many pairs here. I'm going to look away into the camera, and we're just going to go up and down for about 15-20 moves. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Oh man, so now we're going to be trading pound New Zealand dollar. Oh, we was already on pound New Zealand dollar. Let's not fix this. Let's do this again. Pick a random number between 1 and 20. Let's go 13. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Let's go 13 the other way. 1, 2, 3, 4, 5, 6, 7, and 8 the other way. 1, 2, 3, 4, 5, 6, 7, 8, 13. USD CAD. Okay. So we're on USD CAD now. Actually, I'm not even sure if he was on pound New Zealand dollar before. I'm really not sure. I think it just landed there, right? So when I press the charts, it moves it. Oh, let's just do this one more random time, okay? Let's just go for, doesn't matter, up, down, up, down, up, down, up, down, up, down. And I'm going to make sure that the screen's on, even though I'm looking at you, so that you can see what we're doing here. Up, down, up, down, up, down, 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 up, 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 up. Okay. Oh man. All right, New Zealand dollar, Swiss franc. Let's go for this. Let's head over to the 4-hour chart. Let's crunch it up. Hey, we got some old notes on here. Let's crunch it up. Let's bring the replay, and let's do a random pick. Okay. All right, I kind of saw that. So let's remove it, and let's do this one more time. So we scrunched it up. And a random pick. Give it a 3 seconds or so to make sure the replay's gone, and then, oh man, this is not going good, guys. All right, random. Okay, this should work. All right. You know, let's just pick somewhere random. That should do. Come on. Okay. Oh wow, man, I've gone way back. All right, back to hourly time frame. No, let's trade this, yeah, on the hourly script. All right, cool. So 10 trades. That took its time, but anyway, we wanted to make sure that this was random. And I guess this helps with the view time, right? Anyway, okay. So let's use our lines here. First things first, I can see there's an uptrend in this market structure. Price is failing to break the structural highs here. We have multiple wick rejections. We have a structural level low. Strong momentum in a push phase, so I'm not going to enter in a push phase. Could consider a sell on a break of this low here, but I much prefer to see a break of this low here. So at the moment, there is no trade for me, in my opinion. The reason for that is because if this is the exhaustion higher low, then we expect the market to go up. But if we break this, we could continue down. Let's see if we do break this. No, okay, so we'll just continue. We do break this now. Now, to be honest with you, you know, I do want to take this trade. The only issue that we have here is that price does not have enough range to go break even for a 1-to-1. I reckon we'll have to wait for that low to be broken. And what I want to see on this, I don't want to see the market continue to push down. I want to see the pullback first and then the push. That will make me feel much more comfortable to take the trade. Okay, that's completely fine also. And let's see what happens. All right, so now we're ranging on this market structure. So let's clear these charts and let's see what's happening. So now that we're in a range, we do need a clear directional bias. It does look like the bullish pressure is depleting up here. So let's see if we do break above eventually. And if not, we'll look to see if we can take a sell on the way down. Now we have a key level where price is at right now. If we don't break this structure and we do start to break below some of these major levels here in the market, then I would look to take a sell back down to the bottom of this range. So let's see how this price action starts to form. We have broken above now, so I reckon it's time to clear our charts. New perspective, structural high in the market. We've just broken above this structure. I'm not taking a buy. For some reason, I know that we've broken closed above for the first time with a bullish candle. But I do see price reacting in and around this wick area here. So I'd be scared to take a buy just in case we have a break back in. So I'm just going to wait patiently. Okay, so a breakout and a break back in here. Let's continue to see what happens, and another breakout. Now, this is probably a better opportunity to take a buy now that we've cleared these wick areas. Again, my only concern here is risk before reward. And when we're in a push phase, more often than not, we're going to see the market exhaust. So in that instance, I can't take a buy in a push phase. But what I can do is I can identify if this push phase is going to start to exhaust. If it does, then I want to hourly close, just one, key level created, a break below that level, and then what I could do is target probably around 50% of this level, so potentially identifying a potential retest before a continuation, which will give me enough to go break even. So let's see how this plays out. We're continuing bullish, which is completely fine, and we'll continue this bias again from the structural high. If the market now creates a level here, because we're in a really strong push phase now, I do still suspect the market is going to exhaust. Well, it has to eventually, right? At least to about 50%. So now I have a level created round about here. What I would say to myself, actually, I'll take the body. If we get a break close below this level, then I'll have enough range to take a sell from this level to this level here. Is only 20 pips. Oh my goodness. Because this is New Zealand dollar Swiss franc. Is that a break? It's not really. Let's wait for a cleaner break and see what happens. And we continue to push up. Again, we have now created a really nice strong level here. And I don't want to take buys, guys. I know you'd be like, well, Rocks, it's buy bias. Why are you looking for the reversal? Listen to what I'm telling you. This is a strong push phase. The market is going to exhaust at some point. I do not want to take a buy because I don't know how far this is going to push. I don't have any data to work with to the left. So I'm just going to wait patiently for that sell opportunity. Now, see, the thing is here, if I scrunch my charts, it does look like, you know, the candle is smaller. If I pull my charts, it looks bigger. To be honest with you, this is pushed too much. If I buy here, I'll have to have my stop loss above this candle, which is 24 pips, and I don't have a 1-to-1 for price to get there. So now I just need to wait patiently. I would have loved to take in a sell if price didn't push down as much, but there you go. So we're just waiting patiently now. Now we have a consolidation here, which is kind of indicating to me that we may be entering a potential reversal. I'll just forecast this really and say to myself, if this is a structural high, potential trend down, brick wall in place, we don't break above it, we have a key level here. If we break below this, then potentially we can reach some of these targets down here. This is what I'll be going for. So again, just waiting patiently. One more candle and we've broken above. Okay, now I have to take into account this area here in the market. As long as we don't break above this, then we still can consider that. And let's see what happens. So this is not a breakout. A break below this area here will be absolutely perfect. We're moving sideways and consolidating. We're not breaking these structures yet to confirm a continuation of this trend up. Still not breaking it. This is a very good sign. One more. You know, I'm taking this trade, okay? There's so much to support why we should be taking sells here. I am concerned about one thing, which is this push phase. But I take into consideration everything that I'm looking at, right? There was a trend to the upside. There was a structural high, higher low. Failed to break the high, created a triple top, and now broken a major key level it hasn't broken for a long time. There's definitely a bearish sentiment in this market. Now, if I take this trade, what I'm expecting the market to do is to continue to push down to some of these lows here. So I would take this with an instant execution. I have two options: more passive stop loss, more aggressive stop loss, should I say, or a more passive stop loss. I think I'll go for the more passive stop loss on this occasion, for a 20 pip stop loss and a 40 pip target. And here are the rules, right? We were gonna want to get break even by time price gets back down to some of these lows here. And if the market breaks out and closes, we hold the trade, and if the market doesn't, then we'll close the trade with minimal risk. Okay, now we get break even absolutely straight away, which is perfect. And let's see what happens here. So I reckon we would have been all right there for a break-even trade. So we're still in it for now. And we're just waiting now for a TP, hopefully. If not, we'll take a break-even trade on this one here. There you go. So our first trade, waiting very, very patiently for that. Really nice break-even trade immediately. And for our first trade, we take one win. We go 2R on this, actually. Okay, so now we'll start the analysis again. What I want to do in this instance is I just want to make sure that I've got a fresh perspective, looking away from the charts for a minute and then looking back. Okay, so the overall structure of this market is clearly sell bias. We're putting in lower lows and lower highs. We have previously broken this key level in the market. I want to obviously not disregard, or I don't want to disregard, that there's multiple wick rejections here. So let's just take a look at what could be causing that. Not looking back too far, but we can see there's many wicks here. Okay, now what I would say to myself is the market is in a downtrend at the moment. We do have evidence here of a really strong push phase that we could suspect the exhaustion before the continuation. Based on that information, even if price does break this structure, I still feel that we don't have enough range to take a sell. I'd much prefer price to pull back and then indicate a level and then break that level. What I will then do is disregard this level here, anticipate a lower high, and then suspect the lower low to form. Okay, so let's see what happens. Okay, so we've continued to push down and now we get this reaction. Absolutely amazing thought process here. I congratulate myself, because guess what, if we took the breakout here with the more aggressive entry, we would have not got a 1-to-1 risk to reward, or we may have just been able to scrape it, depends. But look at this, price has come back on us. We don't want to take a trade when there's not enough range. So now what I'll do is I'll reanalyze this market. I'll identify prices reacting to a major key level here in the markets. Looking to the left, we've had a major reaction previously in the past, and what I want to see now is this market planning to reverse? And if so, how can I get into this trade? So let's try to take control of my mouse here. All right, here we go. So we have a push phase, a pullback. Now we have nothing happening at the moment. We're just waiting patiently. Now, are we continuing this downtrend here? This is the question. We never disregarded it wasn't a downtrend, but we did anticipate, because of this key level, that we may, you know, potentially reverse. But anyway, we're just putting our thoughts into the universe, and then we'll narrow them down as we go along. Would I be satisfied with taking a breakout here? Well, this is a very major key level. Price has held it once, or created it once, held it once, and if we get the break, we can then anticipate a lower low, lower high formation, and then look for a potential continuation to the downside. Let's see what happens here. We do have this break. With this break, there is a very high chance price could continue down. Now, in terms of stop loss, this is going to be the safest stop loss, but we know we can't take it like this. So I think in this instance, I'm going to go for a more aggressive stop loss here. We don't have a 1 to 2 risk reward ratio. We would have to break this level, but I mean, you know, it's not about the targets right now. It's about risk before reward. So how we're going to take this is, once we break, close below this level, we'll continue to hold the trade. If we break and break back in, we'll then just close the trade out. Okay, let's see what happens. Absolutely beautiful. So I'm sure we have a 1 to 1 risk to reward ratio here. This is 14 pips, and we're at 14 pips now, so we're going to go break even on this one, and let's see if we can hit those targets. Okay, so for our second trade, we have a break-even trade here. Perfectly fine. Now we've broken below this structure, we could be retesting this level again. We'll have to monitor how price reacts. If price starts to push into this level without breaking above it, and then creates a level to work with, I could then look for a breakout of this level, and then a continuation back down to some of these lows here. So we'll see how this one plays out, and go from there. So I wouldn't necessarily call this a break back in just yet. I will identify the level that we've mentioned, and then see if we can get this break back below this. Whew. Man, just, what can I say? So we have the break back below this level. I am feeling confident to take a sell. I'm just going to tell you now, though, we probably cannot take this, because we do not have a break-even range. If we went for a 1 to 1 here, you know, I guess everything happens for a reason, right? We just do not have that break-even range. Even if I just cry for help and look for key levels, even if I just pulled it here to take into account these wicks, can I make a 1 to 1 here? You know what? I am going to take this, to be honest with you guys. I'm feeling good about it. Everything that I've planned has planned out. You know, I wanted to see price come back in. I said it hasn't broken. If we break below this, I'll look for the sell. I'll go for the 1 to 1 here at this level, and I'll just make sure that I've got really, really tight risk management, or aggressive risk management. Again, if we break below strong enough, I'll hold the trade. If not, we will just close out. So let's go for it. So that is not a strong enough break for us, unfortunately. I personally say that I'm not going to be looking to lose a full position on this. So I'm going to now trail my stop loss to half. And, you know, we only lose 1 R on this. Oh, no, sorry, half an R on this, as opposed to a full R if price starts to push back up. So we'll see what happens here. And yes, we do lose half an R on this. But we're being very, very cautious, because price did not do what we wanted it to do, and for that reason I'm not risking it for a biscuit. So I'm going 0.05 minus 0.05, or sorry, no, minus R on this, and there we have it. Okay, so we take a half a stop loss on this, and that's it. We move on. Now price again has created this level in the market. I just think we're going to be stretching it now for this break-even range, to be honest with you. So I'm not even going to try to fight the markets right now. Just going to wait patiently and see what happens. So let's just see. Oh, wow. Wow. You know, I guess, you know, the markets could have gone the opposite direction. We had our stop loss above here, you know. Wow, okay. So now we'll just continue to reanalyze the markets. Don't really have anything to the left. I'm just going to focus on current price action now. Kind of bummed out about that, to be honest with you, but it is what it is. Strong push phase now. We need to see the market correct. So once we see this market correct, then we can look to take a trade again. At this moment in time, we're really overextended, so I would suspect an exhaustion first. And to be honest with you, I am going to go pretty aggressive on this one. The reason why I'm saying this is because we have a really strong push phase in this market. We have multiple wick rejections to confirm a potential exhaustion. I do suspect the exhaustion to come back to around a retest level of 50% of this move here. And we also have strong bullish sentiment indicating a break above this structure. In my opinion, this looks like a good sign to get at least a break-even trade, even if we don't win it. And I know this is a sell-buy structure, but the behavior is telling me otherwise. So for now, I'm going to go for a more aggressive stop loss, so 15 pips. Hopefully we get a 1-to-1. Well, we don't really need a 1-to-1 until here, but we'll go for our 1-to-2. And what I would say at this stage is once price starts to push up, once price starts to push up, what we can do is start to move our stop loss to half position if that's what it's going to do. Okay, so let's get this on the nose here, a little bit down, something like this, that will do, and let's see what happens. Okay, so the market did continue to move up in our direction back to around that 50% retracement level that I mentioned, and now holding this trade just means that, guess what, I'm just being hopeful. In the live markets, probably would have had enough time to go stop loss half on this and call it quits, or even better still, would have been able to go break even on this, you know, because as price is pushing up, if I start to see the rejection, I will see the depletion in that bullish pressure and I will close out the trade. This is a back testing session, which means I'll have to keep this trade open, which I do truly believe I'm going to lose, but you know, it is what it is. What can I say? What can I say? So yeah, this is the beauty of back testing. Now again, I stick by my bias. I can see that price is truly failing to break. If we get a break above this level with a nice bullish candle, I'm going in for the buys again because I still suspect a strong exhaustion at some point. Now this is a break above structure here. We do have this wick rejection here again. Now what I identify with this wick rejection compared to the last one is, if you notice, the last one pushed up, broke back in and closed bearish, well this one is broken above, pushed up and closed bullish. I do believe at this stage there is more bullish sentiment than there is bearish sentiment. Based on the downtrend, the low, expecting the pullback before the continuation, and with price now showing two different behavioral patterns here, one breaking out, closing bearish, one breaking out, maintaining its bullish sentiment. So for that reason, I'm going to take this trade. I'm going to go more passive on this with a stop loss below structure, working with an 18 pip stop loss, and then going for our 1-to-2 risk to reward ratio trade. Now nothing. Let's just see what happens on this one. Again, in terms of management, if we break close above, I'll hold the trade. If we start breaking back in, then I'll look to get out of this at half a loss. Okay, at the moment we're still 0.5R up. We've taken 4 trades, and to be honest with you, we're doing extremely good with our risk management. So let's continue to see what happens. So this means nothing to me. Price has just opened, created its wick, and now if the next candle starts to break back in, we're closing the trade. But if we continue this bullish pressure, then obviously we'll maintain this. Now in terms of management, we have closed bearish. If the next candle closes below this level, I'm out of the trade. If the market continues to push up, then well, there you go. I mean, you know what, I'm going to tell you this now. The candle did not close below this level, and to be honest with you, just like I was robbed of a break-even trade here, or even stop loss to half here, I'm going to maintain that we are still in this trade. So for that reason, let's continue to see what happens. We're continuing to push the upside. We have a very, very nice break-even trade here, and look at the stop loss placement of that as a beauty. Come on, man. We wasn't greedy. We didn't place our stop loss below this wick here. We said we know that there is a high chance price can continue to go down, but we are anticipating this exhaustion. Let's be safe rather than sorry. Give ourselves enough range to make sure we can manage this stop loss if need be. And look, man, even though price shot to the downside, or it may not shot, it went to the downside, we maintained this trade, and look, we were rewarded. So let's see if we can hit these take profits now. And unfortunately not, we were robbed again. But oh my days, oh well. This is life, this is trading, and I mean, what can we do? You know, what can we do? Now, I maintain the fact that the market is potentially reversing. I am now going to say to you all, I'm very confident that I believe the markets continue to push to the upside. Again, same behavioral pattern here. What we can see in this market structure, price breaking, closing above bullish for the first time, whereas previously we wasn't able to break above these structures. Same behavioral pattern as over here. And that's the reason we took the trade. So for that reason, I am going to go in for another buy. We did get break even over here. And in terms of my targets, I'm not really too concerned about structure to the left here. I will have to go for a more aggressive stop loss because I'm definitely not going to place it below these lows here. But what I may do is I may make sure that it's below this structure level here. So for that reason, I'm going to take this with an instant execution as a breakout trade. I'm going to go for my 1 to 2 risk to reward ratio targets here, and I'm going to say to myself at this stage, based on how the markets move, I'm now suspecting that this is a reversal, a trend to the upside, and what we should be seeing is a new higher high formation forming. Okay, so I think at this stage we would have got break even on this with a strong push to the upside, but I'm not sure that we were stopped out here. So we are break even with that push. And yes, unfortunately, we take another break-even trade. This is the life of trading, everybody. It just is what it is. We have 1, 2, 3, 4, 5, 6 trades, 4 more to go. Let's see what happens. I do believe that if the market does not break below the structure, we can continue this bull buy sentiment here. What I would say to you, in order for me to take another trade, what I'm going to be looking for is for price to break out of this structure. Now that we create a potential double bottom of this formation here, indicating a higher low double bottom, if we respect it and we create a break above this structure, then I can suspect a continuation to the upside. Okay, now we've created the break below structure. It'll be too early to take a sell, even though that this is still potentially sell bias with price respecting the previous lower high. I personally do not want to take a trade where I was taking buys. Now I want to switch to sells, and then what I see form on this is a push phase higher low continuation. So I don't want to be robbed, and I don't want to just switch my bias immediately every time I want to do it. What I'm going to wait for now is for the market to create true structure that I can understand, and then I'll go into my next trade. So for now, just waiting patiently, and we will see what happens. So look, if this is going to be the higher low of this new uptrend that I've just mentioned here, that's why I didn't want to take the sell, right? If this is the new higher low, all I want to see is price break above this. This is the wick rejection area where price is failing to break, right? Meaning that there's lots of sell pressure at the moment. But if we break above, there is a strong sign we could continue to the upside. So let's see what happens now. Right, so we break below this structure. Now we have a major key level here. Guess what? I'm just waiting for the price to leave this level. If we get a break below it, then I'll look for a sell, okay? And now we're breaking back in. So now the market is, in my opinion, rangy more than anything else. We have a structural high here. Let's account for as many wicks as we can. Structural low, we have 1 tap, 2 taps, and now we just call this a range. So we're waiting for the market to just give us a true directional bias here. And a break like that does not entice me to want to take a trade. The push phase is too strong. I expect the exhaustion. So what I'm going to plan now is the exhaustion pullback, a level created, key level formed, and a break below for a sell, okay? So just waiting patiently now for the market to create some structure I can work with. Okay, so we're in a very strong push phase. Now I just have to wait for the market to create true structure. At the moment, I would say that I'm more sell biased than I am buy bias, but I'm going to go back to the same behavior as previously, which is a very strong push phase without an exhaustion, anticipating price to come back to a retest level in the market, identifying price failing to break above a level here that it's formed to be a potential lower high, and then price created multiple wick rejections. If now price breaks above this, I will take a buy back to these key levels for an exhaustion, which will give me a break-even trade, okay? and now we start to range. So we see in this depletion in this bearish sentiment here, and this breakout to the upside. So I do feel very satisfied with this. I just know one thing here: we're not going to be able to get a 1-to-1 risk reward ratio trade. Now I have to see if there's confluences to validate why I would take this. This will be a more of an aggressive trade here with a stop loss below the structure for 16 pips. Now if this is the push phase, can I suspect price to get back to around 50%? Probably can, but then again, this just voids the trade altogether because I don't have a break-even range. So for that reason, I'm just not going to take it. And yes, that is what it is. Okay, I was a bit too quick with my buttons there, but it doesn't matter. I do like this breakout of this structure. I do like the fact that price is forming this higher high, higher low formation. I do identify that the market has broken out of this range and come back to this retest level, but I do also identify that for the first time in a very long time, price has broken this brick wall, created a consolidation, which could possibly mean to us that the bearish sentiment is depleting, and now the bullish pressure is stepping into the market. Price broke once, price broke twice. Now we have price trying to break back in, failing. Wick rejection indicating bullish sentiment, and personally I do believe that this market can continue to push the upside back to some of these highs here. So for that reason, I'm going to take a buy with a, let's see now, I need a 1 to 2 to these highs. I could go for a more passive stop loss here, so we'll go 19 pips stop loss here for a 38 pip target. Okay, now I do believe that price can get back to some of these highs over here, and yeah, I think the behavior of this market is definitely illustrating well to us that we can continue to push up, and I believe that's a break-even trade on this one. Now with this, to be honest with you guys, there is just nothing you can do. It is such a shamble. I will say personally that if I'm planning to take another trade here for a buy, what I would want to see the market do is hold above this level. If the market holds above this level and we create, let's say, an indecision, I would then look for another break above this level here, but then a continuation to the upside. Okay, so let's see what this starts to form. Indecision, as we've mentioned, more indecision, and a break, no, not yet, and a break below the structure. So to be honest with you, I mean, I keep saying to be honest, it's probably very annoying, but I'm just trying to gather my thoughts here with this one. Okay, so structural highs, structural lows, breakout, back to the consolidation area, respecting that level, previous structural break. I think if we're respecting this structure with bearish sentiment coming in back to these key levels here, you know, I don't have a bias at the moment, so I'm just going to wait patiently, see what's happening with this market structure. So at the moment, I'm not seeing a bias. So I'm now saying to myself, if this is the retest, I expect the lower low. The lower low hasn't formed. Price is creating multiple wick rejections back around a retest level. If I can now anticipate this to be the higher high, higher low formation, and then look to see if price can break above this level here where multiple wick rejections are formed, then we can consider this as a buy bias market structure, then anticipating a new higher high to take a buy. So let's see if we get a break above this structure. We're breaking below. I'm not confident in taking sells. My plans were buys, and I'm just not confident in taking sells. I'm gonna again just wait patiently, and this is what I mean. It doesn't make sense that the market wants to sell. So we've had a breakout, we've had a break back in, we have this major wick area here, and I'm sticking to the same plan. If we can break above this, I'm taking buys. The market's doing a whole heap of bits right now, nothing, absolutely nothing. So just going to wait patiently now for the market to create some true structure again for me to work with. My buy plan did not follow through, and for that reason I am going to wait. Now again, I do believe that we're just ranging at this moment in time, so for me there's no buy bias or sell bias sentiment. This is a key level in the market, so if we do break below it, we could continue to the downside. In my personal opinion, I would want price to leave, create a lower high, then break a lower high structure before a sell. And for buy bias, I mean, we could go aggressive with a key level entry here looking to identify price failing to break the structure on multiple occasions, and if we get a break above, then we could suspect price will get back to some of these highs here. But I'm not sure that's how I really trade, to be honest with you. But I mean, we're creating this strategy as we're going along. We might as well test everything. I am super nervous to take this trade. I just don't know what my thoughts are on it. So we have downtrend in this market, breakout, higher high, higher low, failed to make a higher high, range, breakout, range, breakout. Yeah, this is a tough cookie, this one. This is a tough cookie, this one. I think if I was to take this trade, I think that I'd be safe to put my stop loss below this level. I don't think that I'll be stopped out immediately, and I do believe that I could manage this trade pretty aggressively. In terms of a target 1 to 2, I'll be targeting back this wick area here. Okay, you know, I think for this one, this is what I'm going to say. I'm going to accept a full stop loss in this one because I'm not sure that the momentum is ready to continue pushing up right now, and I do believe that we could hover in this area for a period of time. Because we're not trending, I don't suspect an immediate move to the downside or upside. So for that reason, I'm going to give the markets time to breathe. I am refusing to go break even on this 1 to 1, and I'm going to hold out. And if I take a full stop loss, I do. I will only be down 0.5% here, which is completely fine, and I'll still have 3 trades to go this week. So let's see what happens. Yeah, that is just, oh my life, this pair, New Zealand dollar, Swiss franc, I just cannot believe. I mean, I should suspect this with the news that happens while I'm sleeping. This is why I don't trade this pair. Absolute nightmare. We had a break-even trade over here because price pushed up, so we got a break-even trade, and over here, one of these ones we got a break-even trade. I think it was this one because price pushed up. Over here was the same scenario where I said if I see this is more likely we're going down than we're going up. What's the point in closing this? I've accepted a full stop loss on it, so let's see what's happened. Let's see what happens. I just looked at my camera to give a little smile there, give a little smile, but unfortunately my camera memory has just told me it's dead, so we're now just solely on the screens here. But look at that, man. This is you know, something that you all should really be focusing on. When you make a plan, just stick to it. When we took the trade, we said we're going to accept a 4-hour loss. We're not going to go for a break-even trade here. We're going to let it run. We're going to see what happens. Even though we could have closed the trade out here, we remembered the scenario over here, and we said, look, we'll accept the loss because that's what we've planned. Now we are 2.5 R up, baby, with 3 trades to go. Absolutely gorgeous. Let's see what continues to happen on this market structure. So that's this. Okay, so at the moment I'm still buy biased on this market structure because, you know, we're creating high highs and higher lows. We want to see the market respect these structures. Now I'm starting to see a sign here of a structural high, lower high, potential lower low formation, and I have a key level I can work with if this lower low is going to be formed, which is going to be somewhere in and around here. Okay, so right now I'll maintain a buy bias sentiment, but if we do start to see these breaks below these structures, then I'll look for a sell back down to these lows. For a buy, I'm only looking for price to break out of this structure. Okay, so for now we're just waiting patiently as we are moving sideways. This is a wick rejection indicating bearish sentiment, which we can suspect at a key level, and if we get a break above, then what we can suspect the market will do is come back to some of these highs here, We don't really have any traffic to the left. The overall sentiment of this market is bullish. The structure is bullish. And I think for this, you know, we're really nice into profits right now. We could go for more of an aggressive stop loss placement just below the wick here. I'm looking for 16 pips and I just can't put it in. 16 pips, and then we'll go for a 32 pip target on this one. Okay, now we're asking a lot. Well, we're not really. I guess we're targeting these areas over here to the left, so that would be completely fine. And with this one, we will manage this aggressively. If price breaks above closes, we'll hold the trade for a break even. If price breaks out, comes back in, we'll cut the losses at half a loss. Well, in that instance, we're absolutely screwed and there's nothing we can do here. So we will take the loss and that's completely fine. So -1R, -1R on this one. Okay, fine. Let's continue the process. Right now we're sitting at 1, 2, 3, 4, 5, 6, 7, 8. 2 more trades to go. Let's see if we can end this one with an absolute banger. So now we're just looking for the market to create true structure. At the moment we are just ranging. You know, the market is not giving us any indication of where it wants to go. We'll make sure we account for this wick and this behavior here, and then we'll look to see how price breaks above this structure if it does. So to be honest with you, this is not really a break for me. I want to see price breaking stronger above this level. Now that that wick's created, I will account for all these wicks here. So this wick, this wick, this wick, and let's see if we can break close above. Very good. That's why we look for a true break as opposed to just taking a break when we want to. And now we're looking for price to break above this structure. This is a very, very good break. I really do believe now we can continue to the upside because this is the first time we've broke this structure in a very long time. I'd say we'll take a more passive stop loss range here. So that's below the, not the current candle we're entering on, the candle before that. And what we're looking to do is target some of these structural highs over here. So let's see what happens with this trade. A really nice push to the upside. A very, very easy break-even trade here. And an absolutely gorgeous take profit in the bag. Let's lock it in. Very, very nice. Very, very nice. Very, very nice. What am I done? Yeah, there you go. And now on to our final trade. Where are we at, man? Plus 2R. Oh, I didn't need to write plus 2R here. So let's remove this. So 2R, 2, 4, 6R, 5R, 4R, 3.5% up, baby, with a 1 to 2 risk reward ratio on a breakout strategy we're just making up on the spot. Whew. One more trade. Let's end with an absolute banger. The overall structure of this market to me is bullish right now, but in terms of a bigger picture, we are ranging. So personally, with a really strong push face to the upside, what I want to see is an exhaustion back down to some of these lows here before a continuation of this uptrend. If I'm thinking along the lines of a break and retest trader, I do suspect price to get back here. So if we get a break close below this structure, then I'm going to look to take a sell. Now that we've broken above this level here, I mean, I'm not going to say that I'm comfortable taking a buy, even though it makes sense. A high-low formation, a breakout and a continuation, just not comfortable. I feel like I'm entering no man's land here with this breakout. Even though we could continue up, I think I'm just going to target the exhaustion if I get the evidence, if this market leaves and continues to push up without me entering the trade. Okay, so now, actually, if price breaks above this level here after the retest of this structure, so I'd much prefer it to come lower, which it has actually. If we get a break above here, I would look to take a continuation buy actually. Anticipate in a bullish break, a bullish continuation. So let's see what happens. Damn, you know I'm taking this trade. Come on. So this is our final trade of the day. Fingers crossed on this one. We'll go for a more aggressive entry on this because, to be honest with you, nothing. I'm going for a more aggressive entry on this, and we are going for a 1 to 2 risk to reward ratio trade. I hope you guys got your fingers crossed for me on this one, because if we can end on a really nice winner, then we're laughing. We are laughing. Either way, we'll still be 1.5 are up, and I think for 10 trades that's really good stats. Over 100 trades will be 15% up, which is really good. So fingers crossed with this last trade. We've taken 1, 2, 3, 4, 5, 6, 7, 8, 9 trades. Actually, the stats are wrong. 2, 4, 6, 5, 4, 4, 3.5. Whoa, hold on. 2, 4, 6, 5, 4, 3.5%. Where did I get 15 from? Oh yeah, 3.5%. Okay, no. So if we lose 1R, we're 2.5% up. If we win, we're 5.5% up. And if we break even, we're still 3.5% up. Okay, fine. So good luck, fingers crossed, and let's play this trade out. So by the looks of it, there's a break-even trade there. So 14 pips and 14 pips break even, I think. So let's put it to break even. It's going to be break even, right? Yeah, whatever. Okay. So for our final trade here, we are what? Break even. So let's count the numbers here. I mean, personally, I think that was an absolute epic session, in my humble opinion. Seems we just made this one up on the spot, but here we have 2, 4, 6R, minus 1, 5, minus 1, 4, minus half, 3. So over 10 trades, we done 3.5R. And then if we do this over 100 trades, that's 35% up. If you ask me, I think they're pretty epic statistics. You know, we really focused on our risk management, really aggressive with the risk management. We also made sure that when we was in profits, we managed those trades to break even. And when we were on our way to targets, we made sure that we were holding. Now, just shows you, right, out of 10 trades, we only won 1, 2, 3 of them. 3 wins, 1, 2, 3, 4 break-evens, and 3 losses. You know, as far as I'm concerned, it's a 33, 33, 33 there. And even with a 1-to-2 risk-reward ratio, you know, you're trading a strategy that has positive expectancy, and also we are focusing so aggressively on risk management is the reason why we could come out of this with a 3.5% profit over 100 trades, 35%. If you ask me, that's absolutely epic. And let's just think of it this way: if you trade in a 100k account, that's already a yearly salary. If you were trading 300k accounts, 300k, you know, you're looking at well over 100k. Now, how do you better that? Well, you continue to adapt, adjust, increase your risk to reward, trade other pairs. I mean, there's so much potential that can come from this. But anyway, I hope you enjoyed this series. If you did, please smash that like button, subscribe if you haven't, turn on notifications, and until next time, family, continue to trust the process.